What is going on, traders? A little different video today. I'm going to show you a trade. I'm going to recap a trade that I did. It was a day trade, and this is going to teach you a few things: how to set up your day trading setup, how to set up indicators, how to set up your chart, how to trade zero DTEs, which is 0 days to expiration. This is great for smaller accounts because these options tend to be really cheap and can actually run exponentially. This specific trade eventually made 400%, and it was made today as of the time of this recording. But we will get into every aspect of this trade, and I will break it down for you exactly step by step. So you definitely want to stick around for this, and let's get right to it. So the ticker symbol that we were trading was the triple Qs. If you guys are fans of this channel, you know that I always say you don't really have to look that far to find options that are tradable, especially day tradable. We are basically looking for options that are very liquid. So on a daily basis, there are a handful of tickers that you know without even having to look will be very liquid on a daily basis. The triple Qs, which is the ETF that tracks the NASDAQ, is one of them. The SPY, which is the ETF that tracks the S&P 500, is another. And then you have the array of mega cap companies such as Tesla, Apple, Microsoft, etc. As a matter of fact, there are traders that just make their bread and butter trading the indices only, the SPY or the triple Qs only. So first, let's talk about chart setup. I'm using Thinkorswim. At the top here, we have the 1 minute chart. At the bottom, we have the 5 minute chart. Now, mainly I use the 5 minute chart for confirmation. Throughout the day, the 1 minute chart is the one that alerts me first, and then I'm looking to confirm it on the 5 minute chart. Once in a blue moon, I will trade off of the 1 minute chart if all of my indicators and all of my confirmation points are actually hit. However, most of the time I am waiting for confirmation on the 5 minute chart. And by the way, if you want this exact same Thinkorswim template, if you're in the Discord, it's under the tools promotion section. You'll see it here. It's the last post. It's called TOS template, or you could just hit me up using one of the links below in the description. You'll see it, and ask for the TOS template, and we'll send it to you. All right, so looking up here at the 1 minute chart, I'm going to expand this, and then I'll go over the indicators that I have, and I will tell you what I was looking at for this trade. I basically use only a handful of indicators on the chart itself. As I said, this is going to be classic support and resistance or supply and demand trading. So you really only have to know how to draw supply and demand, albeit you have to draw it proficiently, but all it is really drawing solid support and demand levels and then using indicators for confirmation. So I have the 9 EMA, which is the blue line here. I have the 21 EMA, which is the white line. I do have the 200 MA, the simple moving average, which is in the green. And I don't use this really for entering trades, but I do use this to see if the price bounces off or from that level. And then VWAP, which is here in purple, I use that pretty much in the same way that I use the 200 MA to see if we find resistance or support at that level. I use it for profit taking. Once in a blue moon, I will use VWAP for entering trades if it coincides with a resistance level. As you see here, actually, this actually happened today where you do have resistance here hit multiple times on the 1 minute, which also coincided with VWAP. And so this would be, by the second or third time, you can enter puts here expecting a rejection. And by the way, if you want to learn how to trade this stuff, you want to chat with thousands of traders in a group that do this all day, every day. You want to learn how to read charts. You want to learn how to day trade. You want access to our day trade watch list. You want access to all of the courses. We have the popular options course, and we just launched the day trading course where I go over this stuff for hours, each and every component here. You want access to the Zoom calls with me and the group. All of that is all encompassing. So sign up and apply to the Traveling Trader Academy. Link is in the description below. We try to keep it a small, tight-knit group to provide value to everybody and be able to answer everyone's questions. So if you want to apply, sign up below. Make an appointment with one of our ambassadors. But let's go over this specific trade here. So basically what happened was we established this low of the day, and I called this the demand zone or the support zone, which you see here in green. We hit it multiple times, and once we tested it again, we had this tall red candle here with good volume, meaning that there was a lot of selling off here. So this on the 1 minute alerted me first to the possibility that, hey, there is some strong selling off going into support here, going into demand here, right? So this is really like the first red flag. And then shortly thereafter, you have another tall red candle. This one even having more volume, as you see down here. This was one of the highest volume bars of the day so far. And this one closed below the low of the day, right? So we finally cracked this. There's only so many times that the price action is going to knock on the door before it cracks it, whether we're talking about resistance or we're talking about support. That is why you really only hear of double bottoms and maybe even triple bottoms, but you don't typically hear of quadruple bottoms, because if something gets tested too many times, it will crack. Same thing as double tops and triple tops. You don't really hear of quadruple tops, because by the time that resistance gets tested, the fourth time it usually cracks. So in this case, what I was looking for was not only a close below, but I was looking for a lot of volume closing below the demand zone, thereby the bulls giving up, the bears taking over for the day. Remember, this is a 1 minute chart. Now, this goes back to experience and your style of trading. One could have entered puts here, right? And this was at around the 304.60 level on the triple Qs. So one could have entered puts here. Or one could have been a little bit more prudent, especially since we're talking about the 1 minute chart. And you see that every time we hit a low, the price action goes back up to retest some of those levels, whether it's the moving averages or VWAP or some resistance levels. So if someone entered puts here, I wouldn't begrudge them that, right? That's okay. That's fine, especially considering the volume we got on this red bars. And then down here, we have the MACD as well. And you could see the bearish MACD crossover, which you can use as another point of confirmation. However, what I did was I did wait, especially after I saw these two green candles the next 2 minutes. I did wait for a retest of the moving averages, since they're right here. We have the 9 EMA here and the 21 EMA here, right? And remember, we are right at support. So this can easily flip between support and resistance multiple times. So I wanted to see if this support will actually flip to resistance. And lo and behold, it did, right? So price action went back up. We didn't enter the puts yet. And once we get a rejection off of the EMAs here, right? The 21 EMA here. And we failed to match this recent high that we saw here where we fell from, right? We basically went halfway up this candle and then failed it. This is where I was confident on entering puts. Now, here is where zero DTE comes into play. We're going to throw a little bit more complexity here. Zero DTE stands for 0 days to expiration. The day of this recording is Friday, and options for indices usually expire Monday, Wednesday, Friday. Some are more frequent than that, but they usually expire, usually every Monday, Wednesday, and Friday. If the market is open, the indices options expire on those days. Now, these options move heavily because when you're trading on expiration day, remember, options prices are made up of a few things. One being intrinsic value, right? If it has any intrinsic value, and extrinsic value, which is usually made up of time value, right? But if on expiration day, we're trading an out of the money option, so in this case, if we're talking about the $304.60 level, well, a 300 put is out of the money. So because we are on expiration day, it barely has any value left. And you'll see what we bought these for and what we ended up selling them for. Because it doesn't have any intrinsic value, it's an out of the money option. And because it expires today, it barely has any extrinsic value either. This is why these can be good for small accounts, although I will give you a warning throughout this video. Now, let's go back to the 5 minute real quick, because I want to show you what level I was looking at and why I bought the 300 puts, even though we were at the 304 level. There are two reasons I bought the 300 puts. One, 300 was the low of the day. If you look at the 5 minute, from yesterday, right? And it looked like once we broke this level, this right here was the support level that we were talking about previously, this one here on the 1 minute chart, where we closed below and finally entered those puts. So it looked like we might be heading down toward that level. Now, there wasn't any support below this, really. This was really the last stronghold here at 300. And the other reason we bought those puts was because the 300 puts, when you're dealing with whole numbers, usually ones that end in 5 or 0, when we're talking about options, those are going to be the most liquid. So if you look at this in volume, the 300 puts did 75,000 in volume, more than any other strike. And remember, we want to deal with high volume options because the bid-ask spread is very narrow. In this case, the bid-ask spread for these 300 puts was almost a penny wide only all day, and it allows you to get in and out of the position. Plus, when there's a lot of volume coming into the option, when people start piling into it, then that raises the price, thereby raising the implied volatility, which is something you want, obviously, when you're buying options. So you'll see here, we sent out the alert. I said I got filled at 9 cents. These were trading at 9 cents, which is why I say these are good for small accounts. But you have to know that 0 days to expiration options, if the price action doesn't go your way, these will go to zero because they are out of the money with no days to expiration left. So while they are cheap, this one being $9 a contract, very good for those who are starting out how to trade options. The two caveats are: one, these options can go to zero if you're not really good at drawing support and resistance and the price action goes against you. And two, you have to be very quick about taking profits or closing for a loss because these move very quickly. They're highly sensitive. The reason they are highly sensitive is because when the price, for instance, of the Q starts going down, then you're going to get an influx of buyers trying to buy that. And when the Qs start going back up, because they are 0 days to expiration and they are out of the money, you're going to get a bunch of option holders trying to sell it quickly. So the price movements are very drastic because of that effect. So we got filled at 9 cents or $9 per contract, and we closed a lot of them at 15 cents. That is a 66% gain. Remember, you want to be quick with it. However, let me maximize the 5-minute here. Because there was really no support level, I left some runners open. Now, here is one thing that advanced options traders do, because you don't want to kick yourself in the ass for closing too early. So what you do is you close incrementally. You can close half your position when you're happy with the profits, especially if your analysis says that there could be a chance for further price action in your advantage. You can leave half of your position open or 25% of your position open. Everyone has a different risk tolerance, but you want to remain in the game. And so when you leave runners, you have already, taken profit on a good portion of your position, but you still leave runners because psychologically seeing that percentage gain accumulate, believe me, even for advanced, experienced, expert traders, seeing something go 100 or 200 or 300% is very psychologically soothing and can boost your confidence for the next trade, which we're always trying to do. So as the triple Qs kept tanking, these puts went absolutely crazy. They're still going crazy as of the time of this recording, even though I closed the entire position out at finally 400%, but we closed incrementally along the way. We closed at 211%, and then we finally closed at 400%. Not being greedy, it looks like the triple Qs are now testing that level, that low of the day from yesterday at 300 that we were talking about. So just to recap, in this video, we went over my day trading chart setup, which is actually pretty basic, because the most important thing is knowing how to draw support and resistance proficiently each and every time, and always sticking to your strategy when taking trades. We learned what 0 days to expiration was, why they can be good for small accounts because they are very cheap and they tend to run exponentially. We learned the risks of 0 days to expiration, that they can easily go to zero, and that you have to be really fast with profit taking or closing for a loss if your trade is invalidated. And we learned how to pick strike price based on the levels that we see on the chart and the volume. And finally, we learned how experienced traders do profit taking, where you're not closing the entire position if the trade is still valid. You are closing a good portion of it for profit to secure that, but leaving runners so that you are psychologically still in the game. If you got anything out of this, leave it a big fat thumbs up. Once again, if you're interested in applying to join the Traveling Trader Academy, where you get access to all the courses, the Zoom calls, chats with thousands of traders going over the stuff, the alerts where we talk about this stuff all day, every day, which will boost your learning instantly. Link is in the description below. If you want my day trading template, you will also see that link in the description below. Leave a comment down below. Let me know if you learned something out of this. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.